Good morning, everybody. I hope you are well. Let me just quickly close these items and get back to our screen. And there we go. Good morning, everybody. And a warm welcome to today's session. I hope you are going to have lots of fun today, lots of learning. Today is already our 7th session on auditing, and I've noted a few familiar names on the list of attendees, and I also assume that some of you might be watching together. So I'm sure there are lots of people who know me already and who has really come quite a bit with us on this journey. So first of all, my name is Johanna Schreder, and welcome to today's session where we are going to discuss and show you how to use the selection or the sampling worksheets in the probe methodology. So we'll do some work on the substantive as well as on the control testing worksheets. All right, so let's just quickly have a look as to what we're going to do. I have mentioned the sampling sheets or the selecting sheets, and then we are going to start with quite a bit of, I want to call it theory, but let's call it in important terms, some background before we just jump straight into those documents, because it is important to understand quite a bit before we start using those. All right, so just to get started first in terms of some admin, some housekeeping, all attendees are muted and your cameras have been turned off. But you are welcome. I'll show you just now in the next slide also to use the chat function to submit any questions or comments or anything that you need to clarify. So please use that. But just to ensure that we don't accidentally unmute ourselves, everybody has been muted. Just yesterday, I was in a meeting, and you know, sometimes it's a bit funny if somebody joins the meeting and then they are on unmute and you can immediately hear it. So yeah, we're just trying to avoid those shall we call them embarrassing moments or just uncomfortable situations. All right, the webinar, I see here that my slide says 1 hour. Obviously, that's not 1 hour. We're going to do 3 hours. So the webinar will provide you with a certificate of attendance and completion for 3 hours. Apologies for that little a mistake there. And then if you do lose the signal, so then if you lose the signal, please just exit the webinar and join it again. You've got the link, so just use that again. And then I did notice that there are a few of you who are using the web browser functionality of GoToWebinar. We do recommend that you rather use the app itself. So it does download the app to your computer, just the GoToWebinar app. And we do find that that is a bit more stable than your web browser version. Then also close your Outlook or your email functionality. Don't read your emails now. Don't, I don't know, have Facebook open on the side or anything that can make your computer use more data, which is going to slow down the video as well as the audio that comes through. I also try to, but you'll also notice it's difficult when we start to get into the material itself. But I do also try to not talk while I am, not talk while the slides are moving over. It is difficult when we are using the screens, when we are in the product, because then I'm constantly moving in the product, and then it's a bit difficult not to talk while the visual is moving on. I do see there's one person, offensive, that says he doesn't have any sound. So I'm just wanting to check, is there anybody else that has issues with sound? Or otherwise, if you can just confirm to me that you can hear me, then I would be most grateful. Maybe just complete or just submit a point there in the questions just to tell me if the rest of you can hear. I did see the question. Thank you, Caroline. I see you can hear me, so that's great. I'm going to give you the link for the handouts just now. So that has already been loaded up, but we'll give you that just now. It's not in the handouts. There's a separate link. And then, of course, the sessions are recorded, and so we will make the recordings available to you. All right, just in terms of using the chat function, and then we're going to go look at where the material is and all those items. In terms of the chat function, if you look at your dashboard there on the right-hand side of the slide, this is where the dashboard is, what your dashboard looks like as a delegate. And you will see there's a question/chat function, and in there you can submit a question or a comment to us. So if you have any questions about the materials, I've got Masilu, and I think Ayandiswa is also monitoring today. So today we are very very grateful having 2 people helping us monitoring the questions on the sessions. So they will also try to help you with easier questions, but then if there is something that I need to clarify in terms of material, anything like that, then they will also highlight it for me, and then I can answer that. All right, so thank you already to those 2, Masilu and Ayandiswa, who are monitoring the questions for us today. So please feel free to submit your comments, your questions, anything like that. All right, so let's just quickly do our first poll to see, hang on, yeah, do you have today's material downloaded? I just want to see how many of you have downloaded this yet. Awesome, I hear that Offense has got the sound, so that's all sorted. Fantastic, I'm grateful for that. Okay, so by far, looks like the majority has not yet downloaded the material. Good indication, thank you very much. Don't worry if you didn't manage to complete that. What I'm going to quickly do is I wonder, Masilu, why don't you just quickly put that same link in the chat again for everybody? Then I'll just explain here where you go and where you get the material. So if you use the link that Masilu is going to include in your chat function, or there in the questions part, then it will bring you to this page. So it's on the Success Community, but you need that code because it's not, well, I think it is open to everyone, but you'll need the special code. You might not be able to get there yourself. So on the Success Community, and I see it is now in the chat function, so you can just have a look at it from there. Then when you get to the Get Ahead free webinar series, then getting to the learner resources, there you see session 7 probe. You just click on that and it will download a zipped file for you, which you can then uncompress, and that will then show you the folder with the supporting documents, the Caseware file for today, as well as a few other documents that we're going to look at. Right, so simply clicking on the probe 7, session probe 7, that will download the file with all of the material for today. Good. Right, what you will also see is the very last blue line on the screen is called previous session learner files. Those are, of course, the sessions for the previous, or the material for the previous sessions. And I seem to think that the recordings, yes, the recordings, if you just scroll down a little bit, the previous recordings are also available there. All right, so that's your go-to page for the Get Ahead series. Right, so download that material. I'm going to give about 2 minutes just to make sure that I don't start talking about material or the content of today's session. I'm just talking other things while you are downloading, because your download is going to slow down the video and the audio while I'm talking. I don't want you to miss any material. Right, if you're not sure where to get the material from, just submit a question for us, but it is in the chat bar, so you should be able to actually see that now, that link of where to go download it. But if you're still not sure, just submit a question, and then we can just respond to your question to give you that link directly. All right, so because there is a Caseware file involved, it is quite a bit of material, but you should be able to get that. Right, it looks like everybody's coming right. In the past, we've had lots of questions about where do I get the material, but we don't really have much of that today, so that's fantastic. You can, if you want to, open the Caseware files along. You'll also notice that we've included a PDF version of today's slides for you, so you can even follow along there. You can also make notes on them if you want to, or if you need to. Right, so that's the questions then, sorry, the material then. And we've got all of that downloaded. I do notice a hand being raised every now and again. If you are raising your hand, please, would you just rather submit a question, because I can't actually do anything when your hand is raised. I see there is someone that's raising his hand every now and again. If you want to ask a question, please just submit the question on the chat function. All right, with that done then, I assume everybody's downloaded the material. We can then go back to our slides and go and have a look at the rest of today's session. So the next poll, just so that we can see where we are in terms of, almost want to say how experienced you guys are on the material, not that that's probably the right way to say, but just how many of the previous sessions have you attended before? And I've really just said all, some of the others, and this is my first one, just so that I've got an idea as to how much I can refer to the previous work we've done. I'm excited to see that almost 60% of you have attended all of the previous sessions. That's fantastic. Because, of course, we do build on each other a little bit. I only got about 50% of people that have voted. So please, will you just give us some input, especially if this is your first time attending, because we are building on the expenses session. I would just want to know, otherwise we'll, if you need to just clarify something later on, we can do that as well. Okay, we're almost on 60% of the delegates that have voted, so thank you for your participation. All right, let's close there. And just for fun, let's see. There, at the very last now, we have probably at least one person that said, this is my first session. So that's fantastic, welcome. But we also have a few people that have attended all of the previous sessions and, of course, some of the previous sessions. So maybe just a highlight of what we've done up to now. We started off with an introduction to audit. So we just thought about some audit concepts. We discussed a high level of the methodology in the probe audit methodology. And so one or two of those slides will also pop up again today. Then we went into auditing specific sections. We did the cash and cash equivalents. We did employee cost. We did the depreciation and PPE part. And one of the other sections was also the operating expenses. And for operating expenses, then we really just, what we had done at that stage is we said, the selection has been done for you. Your senior, your manager did the selection. And now we just need to go and do the work. And we discussed how to do the working paper, etc. Today, we are going to say, right, we have to now go and do the selection. Let's go and select that sample. Let's go and select the items for substantive work and select the items for control testing. So that's the focus for today. But then, of course, still linking into the other sections that we've been working on. For control testing, we're going to link back to the cash and cash equivalent section. So yeah, if there are some new items there and you want to go back to the previous sessions or you've forgotten about some of that stuff, go back to the previous sessions, the recordings thereof, and just go and have a look at that if you need to. All right, so then where are we today? Well, I've said we're going to do the selection. Maybe just here to see that someone, maybe our team, maybe us, we did the planning of the audit file, we did the risk assessment. We then decided on what would be the most appropriate audit plan and strategy for auditing this client. And then for each specific section, we then went ahead to go and plan what will be audited, how we will audit it. We looked at the audit procedures that need to be performed. This is obviously not something we've done yet because in our series this year, we're focusing on the new users. So you might still just get the audit program to tell you this is the work program, these are the audit procedures that you're going to perform, and that's that. However, it is also possible that at some point, maybe not now, you are going to get the manager tell you, well, you go and decide what is the most appropriate procedures, given that you've maybe been doing audit work for a long time, or maybe even because you've been doing a number of those sections and you should now be familiar with that section, something like that. All right, but let's assume then the work program has been done for us. The manager, the senior said, this is the procedures in your work program. We just need to go and do the selection and do the actual field work. All right, and then as part of that audit work program, we are also asked to go and select items we will see as to how we might do specific item selection, but then ultimately we want to get to the sampling to go and select a sample. Right, so that's where we are today. We'll have a look at the work programs, but that is not the primary focus for today. The primary focus for today is not to get the Excel sheet, to reference the materiality, to get the conclusion on the Excel working paper. It really is in terms of how to select the items and then how to complete that worksheet from the sampling sheets. All right, now before we get to the so-called sampling, we first have the big word selection. And so I want to just stress there is a difference between selection and sampling. In selecting items, we will select and then of course test the items using an effective way to meet the objectives of the audit procedure. So objectives are almost the flip side to the assertion. So we want to test the accuracy. So then our objective is to ensure the accuracy of the items. And of course, the higher the risk, the more work we'll want to do. So it will be in response to the risk, but also the reason for the risk. You won't just go and do a bunch of procedures for occurrence. If you are, sorry, not occurrence, the example I want to use now is accuracy. If your concern is whether the client treated that accurately, then you don't need to go and check, was it 5 or 7 chairs, or was it chairs or tables or things like that. Right, of course, when we just do the general testing, we will test everything around accuracy. But if you've got a specific reason for a specific risk, well, then you need to make sure that you are modifying response to that. Or if it is just a higher risk, you'll do more. Why? Because the higher the risk, as we said there on the slide, the more persuasive your audit evidence needs to be. Right, and then in terms of selecting the items, part of your decision is to determine how many to test. All right, and we will see that just now as well. We have different ways of selecting, and we'll see just now how can I select. But so we don't just always go to sampling as a first resort. Yes, today's session is a focus on the sampling methods and on completing the sampling documents. But please bear in mind that it's not always the most appropriate, the most cost-effective way of getting your audit evidence. So there's nothing that says you must always do a sample. There are other ways in which to select. All right, so let's just, oh, you know what, there was another thing before we start looking at the items or the ways in which selecting. What I want to also confirm is if we want to address the objective, we also need to bear in mind the direction of testing. But that's also would be primarily driven through the procedure itself, but always double check yourself. Ask yourselves, why am I doing this? Because if I'm trying to test that transactions occurred, that actually happened, and they were really business expenses, then it won't make any sense for me to go into the filing system and go and select invoices there, because those invoices, well, they may be filed for different entities. I'll go from the accounting records and ask myself for the transactions that have been recorded, in other words, in the accounting records, let me go and see if those did happen, did pertain to the client, did pertain to the business. In other words, is it a business expense and not the owner's, I don't know, the owner's holiday homes telephone account or something. Many years ago, when lots and most of us still had telecom lines, I often had clients who would put through their holiday homes telecom account as well, just that monthly rental, because they just felt it's right, but it's not a business expense. Okay, my house in Hermanus has nothing to do with my business up in Joburg or wherever I am, and so I cannot actually record that. It's not a valid transaction in the accounting records of the business. So the direction of testing is also important, from where I will select the items. Mostly if I'm testing for overstatement, occurrence, things like that, I'll start in the accounting records. If I'm testing for understatement, something like completeness, then I will test from outside to say, has everything that should have been recorded, have all of those been recorded? Well, then I'll start outside the accounting records to say what should have been recorded. Let's select from there and follow it through to the accounting records, to the objective. Good, let's then have a look at how do I select items. So In the auditing standards, if I remember correctly, this one is actually in ISO 500. So 530 is the sampling standard, but 500 is audit evidence. So in the ISO 500 standard, it says, well, one of the ways in which we can select items to test is by simply testing every single item in the account in the list of transactions. So that's testing 100% of the population. All right. Now, it might freak you out especially if you've been doing some work and you've had populations or accounts with hundreds and hundreds of transactions, and you might think, please, it cannot be. But have a look at where the standard says this may actually be appropriate. So an example would be where there is a small number of transactions or items, but very large value. So think, for example, of a business that maybe has 2 or 3 delivery vehicles, big trucks. There are large value items, but only 3. It's probably easiest just to go and test all 3 of them to check that they still exist, check them to the license disk, check that they are still operating. If you're sitting at the client, you can see, oh yes, there's the one truck coming in, and half an hour later, maybe the second one's coming in. So you can actually see that they are still using all 3 of them. You can test the depreciation on the 3 of them, etc. That might be your most efficient way, rather than going and completing a whole selection thing to document why are you testing only 1 or 2 of the 3, and why these 2, not those 2, or how did you decide this is the one? You know, that can just get really complicated. So it might just be easiest, test all 3 of them, get it over and done with, and there we go. It could also be appropriate to test all items in a population where we have a significant risk, and any of the other procedures that we've thought of, that we've tried to, won't give us sufficient appropriate audit evidence. So then we just go test every single one of them. And then lastly, where we've got information in an information system, so let's say the client's fixed asset register is in Excel, and we've got a lot of stuff with a repetitive nature, the depreciation calculation, for example, and it's just easiest to go and check the formulas for all of them. Or if you have IDEA, maybe to say, well, let me just put the whole database in IDEA and test every single item, test the calculation, test the whatever it is that you're doing through IDEA. All right, so in those cases, 100% testing is an appropriate method of selecting items for testing. Next up then is selecting specific items. Now, specific items would be specific characteristics. So one of my favorite examples is if I'm going to test trade receivables for recoverability. So debtors, I want to see this client has maybe a list of 500 trade receivables, and I want to see if the client is actually, if these clients are going to pay our client. So I might go and look at things like all material trade receivables, but material doesn't necessarily indicate that just because the client has a material balance, there is a risk of not paying us, right? Even if you want to include existence, just because there's a material balance doesn't mean maybe the debtor is fake. It could also be saying, let's go and look for specific trade receivables, debtors balances that are over their credit terms, over their credit limit. Maybe look at new trade receivables, new clients. Maybe sometimes even saying, well, you know what, I've covered all the material items of the trade receivables. I've covered all of these. There's no one over the limits, over their credit terms. That's all fine. What else can I do? Well, I could also say, let's go and have a look at the foreign trade receivables, because that's quite a different type of characteristic of our business. We only have a few. We only maybe export to, I don't know, some country, whether it's, I don't know, the UK or Mauritius or Uganda or whatever. It might even be other cases, but just simply saying that's a specific characteristic that I want to go and specifically address in selecting specific items. So it could be, like that second bullet saying, it could be the high value items, the material items, but it could also be items that have specific other characteristics like the credit terms, where they are located. Maybe it's debtors for a new business line, things like that. All right. And then the next option is audit sampling. So that is the third. And sometimes I think to myself, maybe they were intentional when they added that as the last option for selecting items, because yes, Audit sampling is great, but it's not always the best or the only option. It's not always even a cost-effective way. All right. So audit sampling is then when I go and select items in such a way and test those selected items so that I can draw a conclusion on the entire population. So in a let's say my debtors age analysis, I've selected the material items. I've already decided I'm not going to test all of them. Okay, if I have a list of trade receivables of 500, please don't go test all of them, unless you can do it through IDEA. But if you do it manually, please don't do it. All right, then rather than testing all items, we're going to go do selecting specific items. We're going to select all the material items. We go and look for any funnies, any individually significant and unusual items, things like that. And then we say, right, now I still don't have enough audit evidence. Let's go and do a sample. Okay, so that I can conclude on the remaining balance, the remaining trade receivables in the age analysis. Right, now important things here to note is that selecting all items, selecting specific items is not sampling. So what does that mean for us in the audit? If I'm testing all items, well, then I get an answer on all items. Okay? That's the easiest one, is to say I've tested everything. If I get a mistake, I know that is the mistake because I haven't left out any items from my testing. If I test specific items, the material items, data from a specific business line, things like that, I can only conclude on the results from that list for the selected items. So I cannot deduct or deduce my conclusion on the specific items and basically, I'm going to use the word extrapolate those problems to the rest of the untested population because they're not material. They're not also part of that new line of business, things like that. All right. But of course, audit sampling, that is sampling. All right. Then lastly, just to note that in specific item selection, because we haven't tested everything, as well as in sampling, we have to still consider the remaining population. So in specific items, if I've tested all the material items, but there were only 2 of that 500 trade receivables in the age analysis that were material, and the balance of that was only 5% of the total debtors age analysis or debtors total outstanding at year end, I'm trusting that you're going to say to me, well, surely I can't just stop after testing the 2 material items. I must still test the other 498, which has a material untested balance. And yes, absolutely. If you still have a material untested balance, you have to continue testing, either selecting, almost fun to use it, other specific items, or if you then get to the conclusion to say, actually doing a sample is going to be the most appropriate, well, then that's great. Then you can do specific item testing. All right, I see someone else was looking for the material. Thank you, Anya Diswa. I see you've covered that, so great, thank you. Right, then in terms of the probe methodology, you will remember from our first introduction to auditing webinar, or otherwise just go and recap that if you can't remember it anymore. But we built this little picture to say that we start off, let me just get my little laser pointer. We start off determining the desired audit risk where we want to or need to end up. So that is driven through the planning stage, done by the seniors doing the planning, and we know we want to get to a specific desired audit risk. Then in terms of doing our risk assessment procedures, we go through a number of risk assessment procedures and activities, and we determine the assertion, sorry, not the assertion level, yeah, well, the assertion also, but the financial statement level inherent risk, the financial statement level fraud risk, as well as control risk. So those are your overall ones. You can see they're all in the coral. If you happen to notice the shirt I'm wearing today, it's the same Caseware coral, if you want. And then after doing the financial statement levels, we also have the assertion level inherent risk assessment, where we go and identify, record, and assess the risks for, let's say, completeness, accuracy, etc. We also consider the specific materiality of this balance in relation to the actual, sorry, of this class of transactions. And those items put together gives us the risk of material misstatement. And that's now where in your work program, you might see something that says our risk of material misstatement, or ROM, is medium 1, medium 2, low, very high, things like that. Okay, so that is then the, I almost want to say, the level on the ladder that you reached in doing a risk assessment. And ultimately, so that was the arrow going up. Now we need to go and respond to those risks so that we can climb down the steps on the ladder, getting back to our desired audit risk. In our previous webinar, we used the example of a GPS system that said, where are we now? That's our ROM, okay? Where are you now? And where do you want to go? And then you determined the most appropriate way of getting there. I can't remember the examples we used anymore, but let's use an example. Some of you are sitting in Pretoria, some of you are sitting somewhere else in Africa, some of you are potentially even sitting to the south. I saw some people from East London and I think Humansdorp, some places like those. So you are more to the south, other guys are more to the north. I'm sitting in Cape Town, right? If we all decide we want to have sundowners on Table Mountain tonight, right? We will all start by saying that's where we want to be tonight. That's our desired audit risk. I'm sure some of you would really desire to want to be in Cape Town on Table Mountain tonight, right? It's going to be a beautiful day, so it might just be quite nice then, if the wind doesn't blow you off the mountain, but yeah. Okay, but that's the part where we want to be. In terms of ROM, we say, where are we now? Now, I'm quite close to it. I'm about 30 k's from Table Mountain. So the way that I'm going to travel, how long it's going to take me, how much it's going to cost me, and the method of transport I'm going to take is going to be totally different to the guys sitting in East London, Humansdorp, Joburg, Bloemfontein, Mauritius, maybe Uganda, anywhere like that. There might even be some of you that's going to say it's impossible. I can't get there by tonight. I can't. The flight schedules, whatever, it's never going to get me there in time. All right, some of you are going to fly, some of you are going to get in your car and drive, some of you are going to, I don't know, I can tell you, I'm not going to walk, but that could have been an option. Cycle there, ride there, run there, whatever it is. I might use public transport. That's going to be a bit of a different way than just getting into a car or getting an Uber or anything like that. Now, that's basically where we are now. Going back to saying what is the most appropriate way to test. And part of that then is actually saying, how will I select the items that I'm going to go and test? So just as a recap, in our responses, we have significant risk responses. Now, significant risk responses are responses directly addressing significant risks. So there I might have to test a lot more, maybe testing, we don't want to really say testing all items, but sometimes that might be the decision. But definitely I'll be testing a lot more than others. Okay, controls testing, that's one way. And then when we get to these last 4 ones, required procedures, I actually heard the other day another firm calls it standard procedures. Okay, so that's the part of the work program that we'll always do as a minimum. And in those required procedures, the minimum procedures that we'll always do is the selecting the material items. Now, selecting material items, I actually just want to quickly jump back to our slide here. Selecting material items is, of course, your specific item selection. Selecting material items is specific item selection. So already in our methodology, we're saying, well, we start by selecting the high value material items. Then we can also do extended test of detail and extended analytical review. Now, great analytical review is analytical, which is probably then, what's the word now? Substantive analytical review, so where we create expectations. Extended test of detail in the probe methodology is still doing selecting specific items. So go back, specific items, and here we will say select individually significant and unusual items. And then audit sampling, once we've tested all those and determined we still need to go further, we will go and do audit sampling, which is a teeny tiny one there at the bottom of our arrow. And then, by then, depending on what is still remaining, the audit risk, we will get to the desired audit risk because our audit sample will be calculated sufficiently large enough. We will test enough items saying, I've done the other things, or I'm planning on doing the other things. This sampling is, I don't want to call it my last resort, but let's say in terms of getting enough audit evidence, in terms of covering this population sufficiently with this procedure, I will cover that risk through sampling. Give me a big enough audit sample. All right, so there's just another slide to show us the items, and of course then we're going to do the sampling. Then just a slide to just show you again, the material items selected is in your required procedures, or in the material items, I think we say it the other way around. In your work program, under the required procedures, you will be asked to select material items. If you don't have any material items in your population, you have no audit evidence, right? So we have to then move on to other options. The other option is then in your extended test of detail to select significant and unusual items. Of course, if you choose to do analytical review procedures, that will be analytical review procedures. And then lastly is your sample. All right, so that's just linking it to the methodology. Good, let's have a look at some important terms. So audit sampling. That is defined as applying audit procedures to not the 100%, so less than 100% of items in a population. And important, all sampling units have a chance of selection in order to provide a reasonable basis on which to draw conclusions. So all of them don't have to have the same chance of selection, but they all have to have a chance of selection. So I can't, and if you think of maybe like, you know, those hats that the magicians use or something like that, I can't have only half of the balls in that hat or in that bag and ask you to select a sample, but meanwhile the other half of them are still lying in my handbag or my suitcase or somewhere else. Then the other half that's not in that bag is actually don't have a chance of being selected. So that's not sampling from that population. The population is defined as the entire data set from which the sample is selected. Now, it doesn't mean the whole balance in the financial statements, right? We're going to have a look at that. But if we say, for example, the trade receivables, the debtors age analysis that I used as an example earlier, it doesn't mean that I will sample from the whole age analysis. If I've already selected or removed the material items, and I've already selected or removed the individually significant and unusual items, then only the rest, the remaining part, will be the population from which I'm going to sample. All right, but that is then my, if you want to call it, the sampling population. Okay. Then very important is that we already have audit risk in that we may, it's possible, that we could get errors when we do audit work and we actually miss something. That's already possible. But now the moment we do sampling, there's an added risk here to say that now there's a risk that our conclusion on the field work done on the sample would have been different to if we had actually tested the entire population. So if I tested the whole list of debtors on the debtors age analysis, if I didn't sample, in other words, I would have gotten to a different answer to the answer I'm getting now because I only sampled. And that basically means that somewhere I must have made a mistake because if I tested the whole population, I would have gotten a different answer. Okay. There are two types of incorrect conclusions here. The one is not so bad, the other one is quite bad. So firstly, if we use test of controls and we say test of controls are more effective than they actually are, well, what does that mean? We're going to rely on controls operating effectively, and the rest of that sentence, to prevent and detect and correct material misstatements. So now we're relying on those controls to actually prevent or detect and correct misstatements when actually they can't. They're not doing it. So we're going to rely on something that's not working, that's broken if you want, and we may therefore not find all the mistakes there are. For test of detail, when we do ticking and bashing, the material misstatement, we might think that there's no material misstatement when in fact it does, and we just didn't select it. So those are, of course, inappropriate opinions. We might miss material misstatements. Those ones are the, let's call it the bad ones, the worst ones. On the flip side, for test of controls, we might assume or find that controls are less effective because we happen to test all the problem ones than what they actually are, or for test of control, test of details, again, you're ticking bashing, that there is a material misstatement when it does not exist. Okay, so those two options, they're not so much a problem from a risk perspective, but more from an efficiency perspective, because now I'm going to say, oh, there are problems, let's go and do more work, when in fact, if I had done the sample correctly, concluded correctly on the sample, I would have gotten to the right the right opinion and not have spent more time and energy. All right, so that's the sampling risk that we want to address, and that's really addressed through selecting the sample appropriately, through knowing how to conclude on the sample, things like that. And that's also what we're hopefully going to show you and help you with today in the sampling sheet. Then the non-sampling risk is, of course, the age-old problem from just ticking and bashing or selecting items and testing items, and I might miss that there is actually a mistake in the calculations on the invoice, or that they didn't treat the VAT correctly, things like that. So any mistake on the items or any conclusion that I make from the work tested, that is not linked to the fact that there's sampling done. All right, so I have sampling risk and non-sampling risk. And of course, we want to especially address the sampling risk when we are doing sampling. All right, an anomaly, or some people also refer to it as an isolated incident. Now, the standard says that if you come across a misstatement or a deviation that is clearly not representative of the rest of the population, then you shouldn't consider that when you are concluding on the sample together, and then, of course, with that on the population in totality. So what does that mean? If I'm testing, I don't know, in the old days, my example was always checks. If I'm testing the correct accounting of expenses, was this expense authorized, or was the creditor's reconciliations reviewed, things like that. Well, if I find that there's a week of creditor's reconciliations that wasn't reviewed by the financial manager, but that's the week that the financial manager was actually, I don't know, he was on holiday or something like that, then that doesn't indicate that the control's not working at all or ever. Of course, common sense tells us, well, surely you could have reviewed those when you got back, or surely someone else could have reviewed it, or something like that. Yes, of course, we want that. But if that was his only week of taking leave, I'm quite comfortable to saying, well, that's the issue. When the manager goes on leave, there is no one to approve this, to review this, to whatever. That's the issue. The rest of the time, it did actually work. So I'll still record, report, and deal with that issue of that week, but it doesn't indicate that for the other 51 weeks of the year, this was a problem. Okay, what I do have to do though, and that's a part that we often forget about, is before I can conclude that this is an anomaly, I need to have evidence that this is a real anomaly. And I need to have evidence that there was no other instance of that. In other words, if we are told the manager was on leave that week and that's why this wasn't done or that wasn't done, well, get the leave records and see, was there any other leave for this person in the financial year? Okay, before we can just say, oh, okay, he was on leave, you know what, that's okay. Sampling unit, that's the individual items making up the population. So in my example of trade receivables, that would be each and every one of the debtors on the age analysis. If I'm thinking about payments being made, each and every one of the payments. If we're thinking operating expenses, it would be every single one of the invoices recorded in operating expenses. Each of those are sampling units. Of course, we can also have an invoice and any other items when I am selecting items. Stratification is where we are dividing the population into subpopulations. For some of those subpopulations, you might decide to test all of them. For some of them, you might just do a separate sample to the others because they are different. So one of the words that, I don't know, it just feels nice to me, is that a word in terms of sampling is saying that these sampling units need to be homogeneous, which means they have the same chance of being right or wrong when I select them for testing. So homogeneous could also be if I do stratify my population between, let's say, my local customers and my foreign customers. Or if I actually divide the population to say, well, in our expenses, for example, we're not going to select the rental expense as part of our sample because I can just go and test the rental expense much more efficiently by literally going and taking the rental contract, agreeing the monthly rental to the contract that was actually signed, the rental contract, to the expense that was recorded, and I will go and multiply that by 12, confirm the expense. There are 12 expenses recorded. Yes, that agrees pretty much. So for example, let's say the rent was 20,000 Rand a month. The contract says 20,000 Rand a month. We have recorded 20 times 12 is 240,000. The expense in the income statement or in the GL shows 240,000. I agreed that to the contract. It makes complete sense. That's it. I don't need to go and sample monthly rental expenses. So I will actually then probably go and stratify my population similar to this pie that we're seeing and actually take out that chunk. And so we're going to test that separately. And then we maybe go and we say, well, here's another type of expense. In our operating expenses, employee cost. We're not going to go and sample the employee cost. We've already tested that in one of our previous sessions where we looked at the payroll reports and did a lot of work on the payroll testing. So that chunk I remove. So what am I left with? Well, this is the part that I'm left with. Now, are there any items in there that has a bigger or smaller chance of being wrong? Are there any items that are different? No, happiness, then that's the population which we are going to sample from. Another example could be where we might actually still stratify it into 2 or 3 strata and then do a sample on each of those strata individually, conclude on them individually, and then add the conclusions together at the end of the day. All right, so it can get really tricky there. Good. Sampling techniques. So into selecting samples, so how we go about selecting the items, we basically get one of 2 options. Firstly, you have statistical sampling. Secondly, you have non-statistical sampling. Okay, really easy actually. And the non-statistical, that's almost like if you're not this, then you are that. So if you use any selection that does not meet the criteria of statistical sampling, then you are doing non-statistical sampling. So what is statistical sampling? Firstly, you need to have a random selection of the sample items. And by random, I mean really random. All right, not haphazard. Haphazard is I almost like, I close my eyes and I just drop the ball somewhere, or I, I'm selecting these items or those items just because that's the way we do. Random is really without any bias. So very often we'll see also in the selection methods, very often when we are using random selection, we are using random number generators. And it's quite fun actually to see in Excel, you've got a nice random number generator, your calculator has a random number generator, etc. So really using a random selection. In the old days, I know this is going to sound really old now, but my husband, when he did his articles, they did not have computers. Okay? He's not 100 years old. He did his articles in the 1990s. They did not have laptops. I think one person carried a computer with him, but they did audit work by hand. So they didn't have an Excel to use the RAND between function or anything like that. They had these little tables that was random selection, statistical sampling tables that told you how many items and what is this, what is that, and you would have used that table to go and then select the items. All right, so that you could also use, but I think it's a little bit old school. So my first preference is definitely the Excel RAND between or RAND functions. I'll show you a little bit later on when we get to that. But important, to say it's statistical sampling, you need to have a random selection. The other part to classify or qualify for being a statistical selection is that you must use a probability theory to evaluate your sample results, which includes a measuring of the sampling risk. Sampling risk being that risk that we conclude incorrectly, like we said, the test of controls are not, other controls are not operating effectively as they are, but in fact they actually are, or the other way around. All right, so in statistical sampling selection, going to pick the items, I need to have a random selection and use a probability theory. If I only have a random selection and no probability theory, I don't qualify as statistical, I'll go non-statistical. All right, or any other way. Now, important is that the sample size, when selecting or determining how many items to test, we don't distinguish between statistical and non-statistical sampling. We use the same method to determine how many items to test. And then as I mentioned before, the homogeneous sample, the sample should be representative of the population. So the items that are selected should represent the items that are left. Basically, the items in my population should not have some a higher and some a lower risk of being right or wrong. All right. Good, that is a mouthful. Now let's quickly go and have a look at determining the sample size. We'll take a break soon, but we just need to get through the theory here before we can jump into the sheets. Otherwise, the sheets are not going to make sense to you. So in terms of determining the sample size, we have to make sure that the items are sufficiently, or not the items, the sample size, the number of items I'm testing, are sufficiently large enough so that I can actually conclude on them. Remember, this is our, I almost want to say last resort, but that sounds very desperate. But we want to make sure that we reduce the sampling risk, we reduce the audit risk sufficiently so that we can really conclude on the total population. Now, the way that we determine it is then a statistical-based formula, but we can also use professional judgment. Of course, professional judgment is quite tricky to document why did you choose these items. Maybe just something to highlight also from a presentation that I attended last week was specifically warning against where firms have their own sampling policy. So most firms will say this is how we select items, and then the team goes and does something differently without documenting. Well, our firm has a sampling policy of selecting it this way, that way, so many items, but we determined this is not appropriate for our audit, and that's why we decided to select these number of items, and this is why. That's a lot of stories to write. So my preference is just stick to your firm's methodology. Make sure you know what your firm's methodology is for selecting samples, for determining the sample sizes, and stick to that. Right, there are factors that influence the sample size, and we'll look at those just now, but it is important to stick to your firm's methodology. Good, let's look at those factors when testing details. So in other words, substantive testing, you can also see that it comes from Appendix 3 of the Sampling Audit Standard 530. Firstly, our ROM, the higher the ROM, the more we're going to test. The lower the ROM, the less we can possibly test. Now, this is not a factor in determining the test of controls. So, yes, it does affect the sample size, but you'll also see if your risk is lowish, or even if your sample is low, then sometimes it makes a difference between selecting 5 or 7 items or things like that. But of course, if you've got a significant risk, this will be a lot, your sample size will be a lot higher. But it is definitely a factor that gets taken into account literally into the formula. Okay, so the assessed risk of material misstatement, where are we now versus where we want to be? If you have to travel further, you are going to select a bigger sample size. Then have we done other procedures, so other substantive procedures that have been directed at the same assertion? So important, if I've done a lot of testing on classification or cutoff or any of those ones, it doesn't give me any audit evidence about accuracy or occurrence. So then I need to make sure that I don't consider those. So I'll say I haven't done any other work to test or to clarify or to confirm accuracy or occurrence, so I can't take those into account. The desired level of assurance, that's of course where I want to go. And we want to be on Table Mountain tonight. So what is my desired audit risk? The lower the desired audit risk, the further I have to travel, the more work we need to do. Then the tolerable misstatement. And the best way to probably explain this is to say, what is your specific materiality? So how big a mistake can you tolerate, can you live with on your schedule of audit differences? Then the expected misstatement. So yeah, this is also a funny-ish thing, because in real sampling, you know, if I think about people doing research to get to answers, to get to conclusions about a variety of things, then I always need to consider that if I select a number of items, I might actually get the wrong answer in some of them. But in auditing, we actually expect a very low, if not a zero misstatement, to say we expect the client to have recorded all the transactions accurately and appropriately. We don't expect to find errors, because if we expect to find errors, then we are going to have to test more items to still get the same assurance, to still reach the same desired level of assurance, to still have the same tolerable misstatement, despite the fact that we have this expectation that the client could have done things wrong sometimes. Okay. And then lastly, also the stratification of the population. Now, this is where it gets a bit tricky, but if you do stratify your population, then your sample sizes may be smaller. Basically saying that if I'm going to test one sample for, let's say, my trade receivables, I've already removed the material items, etc., then I might get a sample of, say, 10 debtors that I'm going to test. But if I stratify them into local debtors, foreign debtors, and maybe all the debtors from my new stream of business, then I'm going to have 3 samples, but now I might be testing 5, 5, 5 items, or 5 and 7 and 3, or things like that, which is ultimately going to end up testing more than the 10 in one sample. That's the interesting thing. Okay. All right, but that gets a bit tricky. Not necessarily something that we need to break our heads about. Okay, let's look at the factors for tests of control. Remember, when we are testing controls, we have already obtained an understanding of the system, so gotten the system description. We've already identified what controls the client has in place, right? And we have considered whether those are properly designed. Will these controls, if they are operating as they are designed, prevent material misstatements in the accounting records, or detect and correct those material misstatements? If the answer is it looks like it is well designed, and yes, we've done a walkthrough of the controls, it is implemented, then we go and we say, do we want to rely on these controls for our audit evidence? And if the answer is yes, well, then we need to go and do test of controls, basically testing the operating effectiveness of those controls. And so there we'll see what is the planned reliance on the effectiveness of these controls. So if we want to rely on it more to actually reduce the audit risk, the ROM, more, then we'll have to test more. If we don't need that much, so maybe medium reliance, we can test a little bit less. Then a tolerable rate of deviation, again, like your sampling from before, and the expected rate of deviation is how wrong do we think we are going to be? How many times do we think the client would not have done this? And then the desired level of assurance. How badly do we need to rely on this to get sufficient audit evidence? All right, this has been a lot of theory. We've still got a few to go. So I think this is maybe a good time for us now to take a comfort break. It's just gone 2 minutes past 10. So let's take a comfort break of about 10 minutes. I'm going to play one of those little 10-minute videos again so that you can easily see when we are going to start up again. But let's take a comfort break, go grab a cup of coffee, maybe walk around the office, just make sure that you are refreshed and ready to continue. All right, enjoy your break. Right, so I hope you had a good break, got a cup of something warm, and that you're all ready to go. Right, so we started our first hour off with looking at a few of the theory points. We're almost done. We've got about another, I think, 4 or 5 slides, and then we're going to jump into our Caseware file. So perhaps also just if you have not yet opened your Caseware file, you might want to just start doing that on the side. If you want to follow in the Caseware documents, if you want to also click with me, that is definitely possible. All right, so the sample selection methods. We've now said we're going to either do statistical or non-statistical sampling. We're going to determine the sample size, and then we are going to go and select the items. So that was the sample size before. Now we go and select the items. Now, the 5 options given in the standard are on the slide today, but I'll also discuss as to which ones are actually available, or I was going to say more appropriate to today's world. So first of all, random selection. I've already told you about the random number generator. So maybe now is also a good time just to show you how to actually do that. Let me just open Excel and show you. Okay, so I'm going to just increase the size. All right, so if I go to formula and I say rand, you will see that I have rand and rand between. Now, rand really just gives you a random fraction, if you want, a random number between 0 and 1, which you then still have to go and apply to a range. But if I go for rand between, that's fabulous, because I'll say rand between and I'll give you the bottom number, the top number, and it literally then applies that fraction between 0 and 1 to the actual range itself. So if I go and I say rand between, and I have, let's say, my first one is 1 and the top is number 10, it will give me a random number between 1 and 10. And I can actually pull this down and the numbers will change. Now, note also that at first, the first option was actually 10. But as this is a live formula that constantly updates, every time I adjust the formula, the numbers change. And obviously looks a bit silly because I've only got between 1 and 10. If I made it between 1 and 100, it's going to look a lot more random, a lot better, a lot bigger split. This is a random number generator. Okay. The important point here is that if I use a random number generator and I want to make this Excel sheet part of my evidence, I cannot use these numbers as a formula. Because once I close the work program and the manager opens it, or I open it tomorrow to continue my work, the numbers will constantly change. And if the number 30 represents debtor 5 or debtor ABC or invoice number 30, then the moment I actually update these items, they're going to change. And I'm not going to go and do the selection of debtors or invoices or whatever every single time the numbers change. So your challenge here is to basically select all the items, okay? Control C to copy, or you can go right click copy. Where's my copy now? There's copy, okay? And then right click paste, but you paste special so that you paste the numbers. You see there's that paste with a 1, 2, 3, that's the numbers. You paste that. The numbers did change again now because the formula was volatile, but now these are only numbers. They are no longer formulas. So if I go and select the 7 again and I pull it down, well, that's going to replace everything with 7s. It's not going to replace it with a formula anymore. And that's then my selection. And I'll document that I've done that selection using the rand between formula in Excel. Okay, so that's just one of your options for doing a random selection. We also have that in the sampling sheet, but I just wanted to show you really a random number generator. Let's not save this. There we go. Then systematic selection. Now, systematic selection, this one is where we don't start with a random number, but we basically say we want to have an, let's call it an equal spread across the population, because you might have noticed with the actual random selection, I might have had the same item selected more than once. I might have had a lot of items towards the one side there was a time where I had 76, 78, and 79 in that selection, and we had 100 items. So I don't want to have things, almost want to say, bundled up at certain points in the selection. I rather want to have a, let's call it an equal spread across the population, especially when I'm testing controls. This is quite important. I want to test the controls throughout the periods. I want to make sure that my selection includes items, instances from throughout the period. So then I like systematic selection. I'll take the number of sampling units, or my population, being 100 invoices, 500 debtors, 2,000 payments, whatever it is, and I'll divide that by the sample size, 10, 15, 20, 7, whatever that is. And that will give me a number, which is then called an interval. And I will then determine a random starting point within the first interval. So let's say, just to keep things simple, if I have to select 5 items from 100, okay, so if we think back to the Excel, I had 100 points. I need to test 5 items. Then I'll simply say 100 items divided by 5 gives me 20. So my interval is 20. And the first item that I'm going to select in the first 20 items, I will determine using the random start, okay, random number generator between 1 and 20, which will then give me a number, let's say 5. And then I will apply the interval, so add the interval of 20 to that 5 until I've selected all 5 items. Now, basically, that will then get to saying my samples sheet. Let me actually, yeah. So if we then say the first item, now guys, let me just quickly do this here. Okay, undo. No, I'm going to try and be funny or clever. That's 5 then. Then we add the population and we go and we say 25. Okay, this is not grade 1 writing. This is terrible. Another 20 points added. Remember, my interval is 20, so that will give me 45. Okay. Another 20 items added. My fourth interval is 65. Another 20 added, 85. And those are my 5 selected options to go and test. All right, so the interval was 20 because it's 100 divided by the 5, the interval, and that is it then. Okay, right. Monetary unit sampling is very similar to that. Monetary unit sampling is where you don't say that you consider the number of items, not the number of debtors, the number of documents. And you actually then, the sampling units, where before it was an individual debtor, it was a payment, anything. Now it's a monetary unit. And well, in South Africa, we basically go with a one rand item. So what is the total value of your population? The total debtors is, I don't know, 5.4 million and 33 rands. That's your population. And now we'll go and say, okay, so I have to select, it sounds a bit ridiculous, but let's say it's still 5 items. My sample size is 5 or 10 or 15 or whatever. I have to select 5 items from this population of, what did I say now, 5.1 million. I'll divide the 5.1 million by the 5 items, and that will give me an interval. I'll determine, just like with systematic selection, I'll determine the random starting point in the rand interval, and then apply or add the rand interval to each of them until I've got my sample selected. All right, so we'll see those in the selection page as well. Haphazard selection is now what we like to think of as random. Okay, this is where I will ask you to select 5 items. Guys, we've got to go test 5 invoices, 5 debtors, 5 whatever. You pick 5. And chances are every single one of you on the call today will pick different items. But there, because there is no structured technique, there is a possibility of some predictability and some bias, unless you were very clever and you already did like a systematic thing in the past. But very often we will find people selecting the very first item or the very last item or the middle item. And then if you ask them why, they'll say, well, I didn't want that one to be left out, or I felt we needed to include the middle one. What did you do there? You actually applied bias. So because there is that chance of bias, and I almost want to say you cannot actually prove that you haven't applied bias, haphazard selection is a bit of a dangerous one. Of course, with haphazard selection, sometimes you don't have a choice but to go with that if you only have maybe a file of goods received notes that was given to you from the supplier or from your suppliers, and you filed them there, things like that, then you don't have any choice but to actually go and select them haphazardly. You might still kind of try to do a systematic, like jump a few invoices or jump a few goods received notes, things like that. But really, you can't prove that you randomly selected. You can't prove that you've applied a really systematic selection. That will then probably be haphazard. But other than that, especially if we've got information electronically available, we prefer to rather go with a systematic selection or a monetary unit selection. I almost want to say I can even live with random selection if that's what you go with. All right. The dangerous one is the block selection. And you'll see that we don't even have block selection as an option on our schedules. So block selection is literally in the old days again. This was a partner that's still practicing today that told me many years ago that when they did their articles, some of you might have seen this. Otherwise, I think you need to go and look for this in Google or something. What an old journal book looks like. It's a book of about a meter, I'd say. Okay, so from left to right, it will be a meter-long book. And if you open it up, it's hardcover. If you open it up, I'm sure you can actually kill someone by opening it up, because that whole meter then falls to the other side. And then it's got all those columns that we had from accounting, school accounting, all the columns in which you complete the general ledger. Or, of course, if you today look at the accounting packages online and has those columns. But in the days before computers, they had general ledger books and cash books and things like that. So I've had one client where the accountants still used that many years ago when I did my training contract. So in those cases, if they did not have an electronic copy also, which obviously they wouldn't have, you could not do systematic selection necessarily. You definitely could not do monetary unit sampling. So what they then often ended up doing is they would say, select a block of contiguous items, of items touching each other, being close to each other. So a block of items in the same page of the book within this population, and test them. So this partner told me they would test all the invoices, all the payments, all the whatever it is they're testing for January. And then if the items worked for January, they would say, well, if everything worked for January, we're going to assume they worked well for February, March, etc., etc. I'm sure you can help or think with me that surely you cannot do that. Not in today's world. It cannot give you sufficient appropriate audit evidence. If you're testing controls, for example, you need to have evidence that it was applied appropriately throughout the period. So block selection, please, in today's world, we do not use block selection. I can't say never, ever, ever, ever. There might be some scenarios, but in the majority of cases, your other four options, even if it's haphazard, is going to give you a better chance of giving you sufficient appropriate audit evidence than a block selection. Okay, good. Then let's look at the test of controls considerations. So just here to note that if a control is operated, well, let's start at the bottom, yearly. If there's a control that only happens once a year, then you have a full population of one. You can only test one. You will test the whole population. Okay. If the control only happens once a year. If the control happens quarterly, in other words, 4 times in the year after every 3 months, maybe some control that's applied to the quarterly management reports or something, then your sample selection based on the IFAC guide for SMEs, and this is also the way that's been done in the probe methodology, is to then go and select 2 instances and test if that control is operating effectively. Some of you who are auditing legal practitioners' trust accounts might be familiar with this concept also, because this is also the way that you test trust creditors. You'll say, well, it happens every quarter, the client has to do the reconciliation, so we will test 2 of the 4, and then just something that takes it a little bit further in the trust scenario, there they also test 1 of the 2 is the last one, the one at your end. Okay. Then if it happens monthly, well, we've got 12 months. Okay, 12 months in the year. So you will then have a selection between 2 and 4 months that you're going to select. Let's say the payroll report that it's reviewed or something like that, that happens 12 times in the year. That is how that gets done. If it's done weekly, how many weeks are there in the year? 52. So then we're going to test 10 of the 52 weeks to get that evidence. In terms of the daily or more often controls, well, there we have a minimum of 10, right? That's the way it's drafted in the default settings in Probe. And then if you need more evidence, 30. So there's a lot of calculations behind that. Also, there's other people that say 29, 28, whatever, 22 even. In the Probe methodology, there are, if the control happens more regularly than weekly, in other words, more often than 52 times, then your minimum sample size will be 10, alternatively 30 items if you don't expect any errors. All right, so that just then in terms of a few alternatives, just because controls can be performed at different intervals. Right, then once I've done the selection of items, we are going to look at the worksheets, but let's just see when I do the work, when I evaluate the result. Sorry, just still grabbing a sip of my coffee before it's iced coffee. So in performing the procedures, we have to perform the procedures that are required to meet the objective. So if we want to test accuracy, the procedures would have been drafted in such a way to test the accuracy, and we need to perform those procedures to confirm the accuracy of the transactions, account balance, whatever. If a procedure is not applied on one of the items selected, in other words, I had to select 20 items and one instance is not working. Maybe I selected a payment that was made, but actually the client reversed that payment in the cash book later on. Well, actually, I should not have had that payment in the first place. It's almost like in the old days where we had checks and cancelled checks. So then ideally I should have not had that one in the first place. But if it is in there, well, then we'll say, okay, oops, you know, actually it shouldn't have been in this list, in this population. So let's go and then just select the next item. So I selected payment made on the 24th of April 2023. There was 5 payments made on that day. Let's just select the next one that's also in that group. Okay. However, we need to make sure that that item was truly cancelled. So if we say, well, we reversed that payment, actually we didn't do the payment, or the creditor's recon was redone, so that one is actually, whatever the item is that we are testing, we need to be sure that that is actually not a right one. Otherwise, if it is just that there was an error on that one, and now we don't actually like that one, you can't just go pick another one. All right. If there's a mistake on this item, that item has been selected, almost want to say sorry for you. I know the clients often used to say to me, you guys always select the problem items. Can't we just pick another one? Well, unfortunately, no. Neither of us want to select another one. Neither of us want to deal with issues. We would all have preferred if there weren't errors. But hey, that's what we got now from our selection. We need to deal with it. We need to address the deviation. All right, then, if you are unable to apply your procedure, so to test this item the way that you intended to test it, you can then find an alternative procedure to do, and then consider if it needs to be treated as a deviation, especially in a control. Let's say, for example, all items ordered, there needs to be an order request form signed by the production manager, something like that. Now you're getting to invoices and you're checking to see if each of these purchases that were made had a what did I say, order request form. Does it have it? Now this one doesn't have it. Okay, so that basically means that maybe the documentation was lost, which could be one consideration. How do they file? How do they keep track of their records? Or it could be that someone actually ordered this item without it being approved by the production manager first. Okay, that's a problem. But now, in getting to our point of saying, has this transaction occurred? Has it been recorded correctly and appropriately? Is it really a business expense? Well, we can still go and confirm that. We can still say, yes, we got the stock. Is it actually stock that we use in our production? Was the payment approved? Because if we should not have ordered the stuff, or if this was not for our business but for another business, or if we never got the stock, then surely the people approving the payment would not approve the payment. Right. So that could be, I almost want to say, alternative evidence to prove that the transaction still occurred. But if we're testing that the control was applied, well, we can say, okay, so the payment was at least authorized, but we would still need to address the fact that there was none of these order forms. My preference also, not in all cases, but in many cases, is to also say, well, let me say, to consider that you need to do, to consider if you now need to test the whole sample of the alternative control. So let's say we had the control of when a purchase, when an order is made, there is an order form approved by the production manager. If that's the control we are testing, then if this one was not done and we said, oh, but that was, you know, the payment was approved, then we need to ask ourselves, do we need to go and test the approval of payments too? Right. So please just make sure that we don't then get a mix, you know, you can't just get like a mix and match between all the procedures and say, well, I did test 20 or 30 items, 5 of them had this type of control applied and the other 25 had the other control applied to them. No, if we're testing a control and we sample, we are sampling a sample of items and we're testing the same thing to that to be able to conclude on it. Okay, I hope I haven't confused you more. If I'm testing, let's say, the 30 items or the 10 items, 1 or 2 of them do not have that order form, then we can go and see if that transaction was perhaps still appropriate, but the control would be problematic. And then we would need to perhaps say, do I need to go and test the alternative control, but a sample of that alternative control to be able to rely on that control. Okay. Good. And then evaluating the results. When we have tested all the items, we need to also assess the nature of the misstatements and the deviations, as well as the cause. What led to this problem? Is it just a specific type of transaction where this problem happened? Was it only a specific period in which it happened? And if it's just a certain product, a certain type of transaction, a certain period, any of those, we need to consider if we need to go and test more of those. And if we test more of those, focus on where the issue was. So if it was a specific product, if it was a specific type of transaction, or just I always use the example of the 4 months when whoever was on maternity leave. If things basically fell apart there, let's go and test those 4 months in more detail in another case, in another way, to be able to rely on the transactions that have been recorded for that 4-month period, if the controls were operating in a different way. Okay. So we need to go and consider if we need to extend the testing before we can actually conclude on that testing. And also remember that if you come across any deviations or misstatements, this could be indicating that there is fraud. So don't just run off and say, oh, don't worry, the payment was approved, or oh, don't worry, here's a document, or there's an alternative way. It might actually indicate that there was fraud. So we need to be clear as to why this mistake happened and how can we be sure that it wasn't a bigger problem than just this invoice or this payment or this data that we see. All right, then when we are doing substantive work, we will project the misstatement in order to conclude on the whole population, and we'll see how that happens. If you have determined or identified any anomalies, those are excluded from the projection only. It is still a misstatement. It needs to be considered and addressed, and if there's an overs and unders journal or anything necessary, that's still relevant, but I won't include that anomaly, that isolated incident, into my projection. For control testing, we don't project because we use a deviation rate already. And then the closer the projected misstatement is to the tolerable misstatement, the higher there is a chance that the actual misstatement will actually be more than the tolerable misstatement. And here the easiest way for us to possibly consider that one is the specific materiality for that account. Right. Always remember that we are only testing a selection of items, so we need to consider the chances of mistakes we didn't pick up through our sample. They're undetected misstatements, if we want to use that. All right, so that was the theory. Let's go and have a look now at the Caseware file. So open up your Caseware file. You can use soup if you want to enter through it. And this is now the Caseware file then that says wrap up manufacturing sampling. Okay, and it opens up. And yes, we are going to work in cash and cash equivalents. We are going to work in operating expenses, but I want you to go all the way to the bottom to a folder called Probe Document Templates. Right, so the way that we work here, yeah, you guys are seeing my slides. I just wanted to double check that we're not. Let's go to Caseware. There we go. Just between everything that's open. Oh, no, not the work program. We want to be in Pro. Sorry, guys. I've got too many tabs open here. Right, so we're in Caseware, in our Caseware file, and we scroll to the bottom that says Probe Document Templates. That's the form, the folder. So the first one is just a blank work program. If you need to use a blank work program, that's available. But the other two documents are the template documents for selecting items. So substantive testing worksheet 90.20 and control testing worksheet 90.30. Now, remember we said template. So I can't just use this document as is because it's a template and I need to make copies of that for each of the instances when I need to do a sample. So you might have, I don't know, 5, 10, 15 of these items, of these documents in your file in different sections, etc. So the way that the documents have been programmed is to say that when its name is 90 full stop, it's a template, you can't use it. And it's really just so that you don't have duplicates of this document that then override each other's calculations. All right. So when I want to use this item, you could open it up. Let me show you. Let me just quickly open it up for you and then to show you the warning message, not an error message, the warning message that you're going to get says this is a template document, a master template that you can use to create your worksheet. And then close the document, copy it, etc. You could also use the functionality within this. So this is the one option, is to click OK. Right, then in that there's a new little document there. We then need to give it a section number. So in operating expenses, for example, we're going to call it 750 point, and then let's call it 100 just to make sure I don't have a duplicate. Then the document name will say substantive. Oh, goodness gracious me, substantive testing XXX, whatever your name is going to be, operating expenses, sampling, something like that. Then remember your folder name, because if you click OK and you're not sure which folder it is, you're going to have to go search for it with your Control F. But if we carefully choose where we want to go, like for example with the numbers, I want to go to the operating expenses folder. I click on 750 operating expenses. Then this duplicate document, 750-100, is going to go straight into that folder. All right, so I'm going to select operating expenses, click OK. It will then close this document, tell me the document's been formed, close this document, and when I then scroll up to operating expenses, I will see that my new document is included in there. 750.100 substantive testing. And now I can use it. If I now open it up, it will no longer have the warning sign. It will be in a, let's call it usable format or workable format. You can immediately see there are stuff in there. I can now actually use this document. Okay. So that's the one way of making a copy of this document to be able to use it. The other option is, I'm just going to close this one. The other option, if we do that one with the control testing sheet, so just go back down to the bottom. So rather than opening it up and saying, oh, this is a master template, okay, and then doing it, I can actually just go Control C, Control V. So I'll just copy this item. I've selected it, and I'll go Control C or right click copy. Okay. And then I'll go to the section. In this case, we're going to go to the cash and cash equivalent section, and I'll just go and paste it there, or Control V. give it a moment to just transfer over. So there's my document. You'll probably see it now as well. 90.31 control testing sheet. Now it's moved from 90.30 to 90.31 because I can't have the same document twice. However, it still reads 90. So if I open this document, it still reads as, hang on, I am a template. I don't have a section name. So we're going to right click and select properties to now rename it, give it its new name. Okay, and the critical thing here is to change the 90 to something else. In this case, because we are in cash and cash equivalents, I'm going to call it 420.30. I can see there is not a duplicate of that in this section. Remember, I think I did say this in the past, your identifier to me is best practice, is to also say, well, let's remove the numbers. I like to just remove the first few and give it the same numbers, 42031. Doesn't matter what the last ones are. But if something happens and my file gets corrupted or anything funny happens, I can always go and find this quite easily by knowing if my worksheet is called 420.31, I go and look for my identifier because I know I'm in the habit of always changing the identifier to match the document number, and then I can go and literally go and find it in the Caseware file. Actually, just quickly want to show you where that is. Just want to show you this. Give me a second. In the Caseware file, so literally the Windows file, you'll know that if you open up a document, it's got lots of documents in there. All right, so here's my Windows folder for this Caseware file. Now we can either go on date on modified. Okay, there will be a number of items. I haven't saved this thing yet though. Yes, let's just save this. Okay. Now we now go and we see there's the document that I've just created. It's a case view file, which is what this is, and there 42031. So that's a Caseware document. If my file gets corrupted or there's a sync issue or any funny thing, I can always go and find that again in here by saying that's the document, copy it into a new document, something like that. The same thing, crucial, the same thing applies to Excel documents as well. So if you use Excel working papers, always make sure that you have your number there, because if it's an Excel document, I don't see any Excel documents in here at this minute. There we've got the OPEX calculation, right? If I go, this one doesn't now have a property, but if I have a property for this with a number, I can always go and find it if I need to use it somewhere else or whatever the case may be. All right, that's enough of my sermon now. We've now changed the name. We can open it up and we can start working in the control testing sheet. I see a question. May you please recap the first method to move the master to the master document to another section? All right, so the first one, that was where we opened up the master document. I'll show you that just now. So this one, that's where the document is now available. Okay, we're going to work in the documents just now. Right, so the request then I see was just the first item. Let me just check that I've got it right, that Masilu, yeah. So I think that was the question. The first, recap the first method to move them. Okay, good. So I'll go to the substantive testing, just for the sake of it. You can do it with either of them. And if I open it, so you don't have to open it. Nobody or nothing says you must open it. But if I forget it's a template document and I open it and I say, oh, let's start working in it. It's just opening. Let's just give it a moment. Good. So yeah, if I just make it big enough for you, there you can see this. It's really a warning. It's not an error. It's just a warning to say, please note this is a master document. You cannot use this. It's just a template. Right, so what happened here, if I did it a bit quickly, sorry, Milungishi, then I click OK. It tells me, well, you've got to close this document, make a copy, blah, 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 which is what we did with the control testing one. So you could also go to the top right corner, close it, do Control C, do Control V. You could do that. If I click OK, though, there's like a shortcut almost. So the shortcut then is to say, well, what is your document number that you want to call it? I'm going to stick to 750. That's the operating expenses one. Let's say number 99, and I'll say substantive. I'll call it second because it's our second time doing it, so that you can clearly distinguish this one from what we did before. So the first two, I type in. The third option, the folder number, is where I choose in what folder do I want this to appear. I want this to appear in the operating expenses folder. Okay, so that one is a drop down. The other two I type in based on what I want, and I click OK. Once I click OK, it tells me your document has been created. You can now close, basically. Click OK, and the document will close. This is the master template. Magically closes. And I say magically, my son likes to believe there's a lot of magic things that just happens, you know. It just happens magically that you now have your new working paper, 750.99 substantive second, and it's ready for your use. All right. I believe that is what you asked for, Gisi. If that's not, then we can always just recap that again afterwards. All right, but what we've now done is we've made copies of the substantive and the controls worksheets. We are now ready to go and audit, or rather to go and select. All right, so in your operating expenses section, the 750 section, you will see there's a document that's already partially completed. Which one is it now? 750 testing sheet, 750-20. Sorry, guys. Okay, so 750-20 is already partially completed. It's exactly that same one. It's just already partially completed. So let's work in that one. Then we don't have to start from scratch. Good. This is now when we are testing substantively. We'll do the control testing one afterwards. But firstly, substantive testing. So it starts off with a summary of our planning and things like that. Right at the bottom, we'll do some detailed testing stuff, but we're starting with our working paper documentation. So briefly describe the test that you're going to be performing. Now, in this case, you could have gone and documented a whole long story, but basically we can also just reference 750, just say step 12 and 13. Let's go and look at the work program and see what the actual steps are. So the work program is 750.10, and if we go and look at the required procedures, I know the screens are changing over quite a lot, so I just want to give a second for that to happen. So if we look at the required procedures, step 6 here says, I just want to get my printed the work program also so that I don't get confused between everything. So the work program here, step 6 says select material operating expenses other than those that have been selected for testing elsewhere, and go and do the following. Step A, test the castings and calculations. Step B, follow through to supporting documentation. Step C, agree the details such as the supply name, blah, 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 etc., etc., etc. Step 7, select material operating expenses from the general ledger. Use the samples of material operating expenses already selected. So in other words, what you've selected for 6, and make sure that your VAT was calculated correctly, your VAT was accounted for correctly. Okay, so it's basically telling you select one sample. Don't go test 2 samples, select 2 samples, 1 sample, and you'll do procedures A to F for step 6, and then you'll do 7, A and B. But these ones are our minimum required procedures. Our specific selection, if we think about the type of selection, because it says select material items, individual material items. Okay, so obviously this is not sampling. Sorry, we then also determined that there aren't any individually material items. How do I know that? Well, because someone already looked at the general ledger and found that all the material items are tested separately. So we'll look at that just now as well. Then we're going to go do a sample. So let's look at the procedures under the substantive sampling tab. All right, so the substantive sampling tab, when designing and testing the samples below, this is the standard sampling procedure. So you're not even testing items yet. This is telling you about how to determine a sample size. There's a few procedures that have already been tested. Consider the characteristics of the population to determine if the population is appropriate for the purpose of the procedure, if we can actually test the accuracy and occurrence of this. So that's already been done. Ensure the sample size is sufficient. Select items for testing in such a way that each unit in the population has the same chance of selection. That's already been done for us, etc. So Helen's already done all of that. Helen is our star auditor. Right, then once that's been done, we then go and do step 12 that says select a sample of operating expenses other than those selected for testing above from the general ledger. So it's the same as step 6, it just select a sample. Step 6 wording says select material operating expenses. Then steps 13 says select a sample of operating expenses from the general ledger. So again, a sample, or use the sample already selected, and extend step 7. So we'll do exactly the same steps as you did for the required procedures, only this time we will be doing them for the sample. Okay. Right, so that is the, I was going to say the nice thing is if you had selected the material items and then still had to do a sample, you're going to do the same things to it. You're just going to have your items separately listed for the material items and separately listed items for the sample. All right, so that's the work program. I'm not going to come back to this again, but you've seen the steps. You can always keep them open. How do we split our screen again? If you need to, you use your window left, and then you can do your sheet on the other side, window right, to see the screen split between the two. I see mine doesn't want to do it so nicely today, but there we go. Now I can see the two of them together. Okay. All right, I don't want to keep the work program open or on the screen for us. I rather want to have a big enough screen so that I know you can clearly see what we are doing. I'll keep the work program open on my side so that I can read the procedures for us so that we all know what we are doing when we are doing them. Okay, so that's the work program procedures. You can see I just referenced step 12 and 13. I don't have to rehash all of those things. Then the population to be tested. The only thing I can select here is actually the operating expenses. Why? Because we told this document it is an operating expenses item by naming it 750.20, the 750 part. So now it won't give me all the items, all the lead schedules. It just says, okay, you're busy with 750. That's obviously operating expenses. Let me give you that option. However, we're not going to test the full balance of 19 million through the sample. We have already gone and said, how best do we test operating expenses? And what we have done, or what Helen has done, and she's already determined that we only sample 2.78 million. Okay, let's go back to our Caseware files, and I can show you where she got that from. There's a document called 755. 755 is where we calculated the population for our sampling. Just opening that up for us. Right, beautiful working paper, clearly documenting how we got to the 2.78. All right, so that's everything's there, nicely done, but let's have a look at the numbers so that you can see that. Okay. So the total in the lead sheet, as we've seen, is 19 million. And then what we had done is we'd already identified audit fees that were previously provided for, that we'd removed, reclassified, right? That was done right in the beginning of other expenses. And then there was a number of expenses that are tested under the operating lease liability section 556. Now remember, I don't just thumb suck this and hope that my colleague testing operating lease liability will do it, has done it, anything like that. I speak to him or I say, listen, are you testing that or am I testing that? I just need to make sure. Right, so you've got it, you have tested it. There's the section. I might even have a working paper reference to reference those items to. In this case, we just reference them to section 556. Those are the rent, rates, and electricity, which you'll find in many cases it's just so much easier to audit using a predictive analytical review. All right, so that is really the way in which we've then referenced those out. There's nothing wrong with including them in your sample, but remember, they're not really homogeneous to your normal other expenses. They are different in exactly the same way that your employee costs are quite different and your depreciation is quite different. And in previous sections, in previous webinars, we'd obviously tested those. So we're referencing them out, removing them from this big population for operating expenses, referencing them to where the work has been done. And our remaining balance then is the 2.78. That is what's remaining of our sample population, 2781. All right, just to highlight to you also that the fact that there's a little red dot there indicates that the standard selection or the standard item selected that we had, the 19 million, is actually not there. It has been overridden. And because this is an input cell, you can actually do something there. The overridden, the original, the one that pulls through is 19 million, right? And you could even then reference, I see that hasn't been done here. Oh, there's the reference to 755. So, well, we got this number from a working paper, 755. Let me just show you where the reference is, 755. There we go. All right. So that's where we got the 2.7 million from. All right. Good. What are we testing here? Just grab a sip of water. We are now testing the occurrence and the accuracy of these items. Where do I get that from? Well, it's from the work program. We now looked at the work program. It's a lot of jumping around here. From the work program, those procedures 6 and 7 had EO and AVA. See all those procedures, EO, AVA, EO, AVA. So that's why I know we're testing occurrence, because it's a transaction, so it's not existence, and accuracy. Those are the two blocks that I test for assertions. And once I tick those, you'll see at the bottom the risk parts appear. So that's the purpose of that. Now, some points to document. Describe the unit that will be tested, or the sampling unit, the individual item that we're testing. And here, when Helen prepared it for us, she said, each transaction within the expense account will constitute a sampling unit. Right, so that's the sampling unit, each of the transactions, each of the line items in the GL. How did you test the completeness of the population? Now, very important. This is not just a default documentation. In every single one of our sessions, we've stressed and said, please, we need to always consider that where the client gives us information that we are using, that's representing anything from the client's trial balance, we have to make sure that it is complete and accurate such that we can actually use it for our testing. So we document. Why are we happy that this list of GL is right? The population is extracted from the client's general ledger. The completeness of expenses has been tested through unrecorded liabilities in the trade payable section. Our colleague on the team did do that, and we recalculated the remaining balance for the sampling on 755, that Excel sheet we just looked at. Describe what will you consider to be a misstatement. Okay, when is something going to be an issue? Well, transactions for which there's no supporting documentation. Well, how can we then determine if it is actually a transaction that occurred? An occurrence cannot be proven, as well as transactions accounted for at the incorrect value. In other words, the invoice does not match the entry in the general ledger. Then those would be misstatements. Remember, substantive procedures, we're trying to prove the balance. And proving the balance has the account or the amount being correctly accounted for. We have the specific materiality pulling through, as well as the items individually significant also pulling through. But that's just for our information. Then risks. The risk of material misstatement for existence and occurrence in AVA is exactly what we determined in the risk assessment. Those also match the work program numbers. And then in determining how big our sample size is going to be, We then need to document what is our expected assurance from other work that's going to be done. So this is sampling. Then the sheet will automatically activate a line for each of the other types of procedures we've activated. In this case, we've only activated required procedures. But if you did have extended analytical, extended test of detail, any of those, even control testing, there would be a line in there to say what assurance do you expect from each of those so that you can document it. Because let me just remove this one, as I have not recorded it, I've got a so-called risk factor here. You can see 1.86. But when I say, okay, I have obtained some assurance, 1.86 become 1.57. So the risk factor decreases. If the risk factor decreases, my sample size is going to be smaller. Even if we just go back again and see here the sample size, where's my sample size? Here, my sample size is at 7. When I decrease it and I say I've got medium assurance, the risk factor came down, and now my sample size is only 6. Okay. All right. So that is in terms of the risk, to say, if we think about those factors, what was the risk? What is the assurance we need to obtain before we get to desired audit risk? All of that stuff is automatically taken into account. Then in terms of determining the sample design and size, we need to give some inputs here. What is the first number in the range? What is the last number in the range? Especially if we work with documents that we're going to select, that's important, but also to determine how many items there are. Your document will then automatically calculate 723 in this case. Now, if you were working with, let's say, delivery notes that starts at 10,531, you'll document 10,531 and whatever your last number is, and it will still calculate that you have 723 items if that's your population size. So it really is the document number. Okay, in the old days it was a check number, it's an invoice number, it's a delivery note number, it's an order number, whatever the number is. And then at the same time, the population gets pulled through from the top, just to scroll up and say 2781, there at the top, comes down to say, so the total population that we need to do detailed testing on is 2.78 million. Then you have sections for the material and individually significant items, as well as unusual items tested. You don't fill in anything here, it all pulls through from the bottom. So let me just show you here, we have sections. If I have items 1, 2, and 3, and the values of these, they now need to be material. So let's say the one is 2, oh, good, yeah, I'm not going to actually have material items, but let's just keep it at 20,000. I know they're not material, but just to have something reflected here. Right, so I've got 3 items, and the total value of those material items, or if they were material items, is 60,000. If I scroll up to the top, you can see material and individually significant items are now listed as 60,003 items. So the remaining balance that needs to be sampled from has now come down from 2.78 to 2.72, excluding the 60,000, and 720, excluding the 3. Right, but we don't have any of those today, so I'm just going to clean them out. The same would be the case for your unusual items. Right. The one difference with these ones is, if you do have a difference between them, the difference is just an actual difference, and you don't extrapolate them. So when you get to the evaluation, they will be there. Right. They won't be extrapolated, whereas if you've got errors at the bottom under your sample, they will be extrapolated. All right. There's a lot of up and down. It's to me, this is a fantastic document to really document carefully what I have considered. But yeah, there's a lot of links between these items. Right, then the sample size is determined as 6 based on the number of items, the risk factor that I need to determine. I'm going to test 6 items. I then have the option to indicate how I want to select the items. In this case, I've selected systematic selection. All right. It therefore then goes and says random starting point. What is my interval between 1 and 120? And I will go and randomly, using a random number generator, calculate document that I am going to select number 5 first. I would recommend that you don't change these once you've done the selection and once you've gone and looked for your invoices. Right. You can also, because this is operating expenses, because these are values, you could have also selected monetary unit sampling. That could work. And of course, random number generator, haphazard, could technically also have worked. As soon as I then enter 5, this document now knows the interval is 120.5. I start with 5 and look what it does when I go to my sample. So if I go sample, it does indicate that 1, 2, 3, 4, 5, 6 items, immediately lists those 6 items and gives me the number of items. So what number in that list of items? We said we have 723 items. That's the number that I need to go look for. Okay, that's great. Where do we find that? So let me go and show you. In your supporting documents, you've got a document that's called Wrap-Up Manufacturing GL Operating Expenses. So that's the same general ledger that we've worked with before, but now we've excluded the rent, we've excluded the depreciation, any of those items that's not forming part of our population. That's what we're looking at today. Okay, if you want to know that this is appropriate, on the left-hand side in column A, I'm just standing there anywhere, and I'll type control, hold control in, and just press the down arrow. It will go right to the bottom of the list of items that are all connected to each other. So in this case, we'll go to the closing balance, and there I can see my closing balance. Let me just highlight it in green, 2.78. So in putting all of this together, we have included a number. See, these numbers are a little bit weird. Oh, you see so these ones stay the same, just to make sure that they work with each other. But we have calculated then that there are 723 items in the population. Whenever there was a transaction, they all have numbers. These items don't have extra numbers. You see the last one was 683, it just goes straight. And so that's how we determined that each of these transactions are in there and what their numbers are. So now I'm going to just quickly split my screen so that you can see when I needed to go and find number 5. I literally used sorry guys, let me just show you this column. I used the column of counting the number of items, and I went to go, okay, that's number 5. That's the transaction I need to test in my selection, my sample, and I went to go record and say, that was bank charges, the description was BR cash, 10,000 fee, blah, blah, blah. That was the bank charges, 156, and that's also the bank charges that we then recorded in our schedule. The next item was number 126, and we'll go and find that one. You can either scroll, or of course now you could filter them as well. But there's number 126. It's a paper statement, 26 Rand. So there's a paper statement, 26 Rand, that's it. It's also a bank charge, interestingly enough, but it doesn't matter. We said all of these transactions have the same chance of being selected. Next up, 246, and that's where I will then conclude. 246 was the next number of item, and this was again bank charges, service fee for that month, 234, 234. All right, and that's how we then went to go and record the items selected based on a systematic selection, dividing up all of these items into intervals. Right, I think it is necessary for us to take another comfort break. We've still got about 50 minutes to go, but I do think we need to take a comfort break. I'm going to give you 10 minutes, but I'm going to start right after the 10 minutes. So if you need to go grab a cup of coffee or do what you need to, just make sure that you are back, because we still have quite a bit that I want to show you. Right, so enjoy the break. I'll see you afterwards. Sorry, I see I started the wrong video, so let me start the right one. Right, welcome back to our session. Let's start the last bit. Good. So we've selected our sample for substantive work. We have already completed the heading there is the client book value. So this is what's in the client's accounting records. And Helen's already done the testing on the other ones for us so that we can see whether there's a difference. So at the moment, these three look like they've got an issue. It's not the case. We're going to quickly audit them. So let's go back to our standard supporting documents, the folder with everything in there. Open your folder, supporting documents, substantive testing documents, and in there you will see there are 3 slides. So if we look at what we've got here, first of all, 367 sewage. So that's the sewage charge. If we open up the sewage charge invoice, what will we see here? This is now where we need the work program steps close by as well. So I've got the invoice here. I'm just going to again split my screen. So Windows right, even Windows left here so that we can see what's happening. Take away my document map. So here we can also see, let me just make this also a little bit smaller, supposed to link. Okay. So in here, I've got the invoice from Multi-Waster, Florida. I can see the address there. This was done, or service invoice for wrap-up manufacturing, our address, our VAT number. At the top is the waste company's VAT number, sanitation charge. The invoice number is 957, right? And here we've got 1,100. So with the VAT, it's 1,100. What did the client record? 957, which is exactly the amount per excluding VAT. So that's the amount we're going to record there. Audited book value, we can see the invoice is 957 and 17 cents, which means there's no difference between the amounts. Let's go look at the steps that we need to complete. Step 12A says test the castings and calculations. So Helen's already done that for us. Follow through to the supporting documents. Now the cool thing here is you can almost treat it as Excel with a little shortcut as if you are using WebDings. I think we showed you those in the past with a little tick and cross. So if I just type A here, it will automatically show my little tick mark. If I type R, then it will show a cross. So yes, we've agreed it to supporting documentation. I'll type the A and that's correct. If I type or click on tab, it takes me to the next column. 12C, the step is agree the details such as the supplier name, the dates, amounts, etc. So let's just check the date also. This was an invoice on 31 October. That is also the date that the client has, or that's on the documentation. So I'm also happy that the client details agree. D, test the mathematical accuracy. Helen's already done that, so that's all great. 12E, ensure that expenses do not include capital items. Well, sewage is not really capital items, so no, not really. It's definitely not. So that's not in there. Ensure that expenses related to the conversion of inventories are classified as cost of sales. Well, sewage is also not cost of sales, so we are happy that that's been done. Helen's also tested step 13A and B, which was that the VAT was correctly calculated in accordance with legislation and that VAT was correctly accounted for. So that she's also done. So the invoice for the sewage, no problem at all. We see that the previous one had an issue there of 30 Rand where the client processed the incorrect value. So that's one issue we already have. But at least for our fourth item, the one that we've now tested, there's no issue. All right. So if we then go to the next one, it's motor vehicle, petrol and oil fuel for S. Harper. That's probably Sean Harper. So not in the X, in my schedule or in my supporting documents, fuel slip. The fuel slip is quite small. So let me just increase the size of that thing for you. I've already increased it. So there's our invoice. You can see that it is at the Christian de Wet petrol station. So that's not the individual, which is what I initially thought, but you can see there it's the Christian de Wet Road, Rand Park Reach. So it was in Rand Park. This is the customer's receipt. You can see the slip was done on the 7th of December. When did they account for it? Well, 31 December. However, if we go and we look at the Excel, let let me just quickly, what was the number that we had here? The number is number 487. So if I just go 487, go find that item. Oh my goodness gracious, guys. There we've got 487. You can see that this was a petty cash payment. So petty cash is only done at month end. But what I am comfortable with is the fact that the expense was incurred on the 7th of December, which is the month in which the petty cash payment would have been made. So I'm comfortable with the date. The amount, if we go back to the recording, the amount is 1,100, which is exactly what's on the slip. And there is no VAT incurred or claimable on that. So I will include the full 1,100. And if we go through our procedures again, Helen's already tested the costings there. We are comfortable with the details that we've agreed. The C was the details. D is the mathematical accuracy. And how can I be sure? Well, we only incurred one line item. So 1,100 plus 0 is 1,100. If you wanted to, you can obviously also go and calculate the number of liters multiplied by the price, but we don't have that price on here, if I remember correctly. So that's going to be a bit difficult, but you can always go and check what the price was at that stage. At least this is unleaded, so this is petrol, I think, not diesel. So you could technically have gone and determined what the price was, because diesel can be different prices at different stages. But if that was important for you. Is this a capital item? It's not, so we have correctly not treated this as a capital item. Ensure that expenses related to the conversion for stock has not been included. Well, Sean Harper, who got this petrol, is a director, so he's definitely not part of the production and cost of sales. It's also not for the generator or anything like that to keep the factory going in times of load shedding. 13A, 13B, there is no VAT, so the VAT was correctly calculated and correctly treated, the fact that there was none. All right, so that's the second slip. If we then go back to our supporting documents, the last item is ACE alarms. Goodness gracious me. ACE alarms as another invoice. So if I just make this one slightly smaller, there we've got it. So again, wrap up manufacturing with their VAT number, ACE alarms, again in Randburg, labor for system reset, and there's the cost. Now, the cost of the invoice is 650, but excluding the VAT, it should have been 570. So they've clearly recorded this item incorrectly. ACE alarms, everything else seems fine. The date of the invoice is fine. But what should the expense have been? It should have been 570.18 only. So in other words, they have an incorrect recording or an overstatement of the expense of 79, which interestingly enough is exactly the VAT part. Okay? All right, so 12A, check the costings and calculations in the general ledger accounts. Follow this expense through to the supporting documentation. My goodness. Okay. 12C, agree the details. Yes, we're comfortable with that. D, test the mathematical accuracy. You could go and take out your calculator and check that. I know Aylan's also done it for us, so we're comfortable with that. 12E, ensure that the expenses do not include capital items. Labor for system reset of the alarm, that's not a capital item, so I'm comfortable with that. 12F, ensure that the expenses related to the conversion for cost of sales is not, has been included as cost of sales for inventories. This is not cost of sales. This is not part of inventories. It's just part of the admin expenses because it's just resetting the alarm. 13A is the VAT. Well, actually, I don't think the VAT's been treated correctly, calculated correctly. They didn't actually do it at all, and they definitely didn't record it correctly. And then I will just put in a document there or a description there to say VAT, sorry, I'm clearly on caps lock now, VAT not excluded from expense when recorded, something like that. All right. I will then now, in terms of the nature and the cause and effect of these misstatements, go and consider if these are anomalies. If they are anomalies, I've got this exclusion column, just to click there, which will then basically exclude it from the total, and this total is then used to what is the word now? I've lost it. To extrapolate, that's the word. I'm looking for something that starts with the letter B, to extrapolate the error. So you can see now, if we go back to the evaluation of the misstatements, the extrapolated error from the sample is now sitting at 44,000. That's a lot more than what we got here at the bottom, being 49 Rand. Right, but now what it's done is it's basically said, what was the population that you tested? So it was 3,000. We had a 49, almost 50 Rand error. So if I had 50 Rand in 3,000 being wrong, that gives me a certain error rate, if you want. And that error rate was then applied to the total population being 2.78 million. So that tells me there should be an error of about 44,000. If we are comfortable with this, we can always, of course, extend the sample, say we want more comfort, or draw a new sample, or go and say, well, maybe we are, if we go and investigate and we determine actually the client's messing up the VAT here all the time, or something like that, go and test that in more detail. But at this point in time, if nothing indicates anything more, we can comfortably say that those 6 items, having tested the rent and everything else separately, gives us the evidence we need. Why am I saying that? 44,000 is not that big in comparison to our specific materiality of 800,000. So we can't say that we've got evidence that the account is materially misstated. Okay, materially misstated, we don't have to qualify our audit opinion potentially for this. However, if I just show you the work program again as a reminder and of our materialities, the amounts below which items are clearly trivial, considered to be clearly trivial. In other words, if the balance, misstated balance, is less than 30,000 Rand, we don't have to go and put it on our schedule of audit differences. But now the projected misstatement is 44,000. So we are going to have to go and schedule, or record rather, an overs and unders journal, a journal of uncorrected misstatement, to the value of 44,000 Rand. Now the trick, of course, here would be to consider what is your contra account, because it's operating expenses, but what is the other side? On the one hand, it is your VAT. On the other side, they've incorrectly calculated this or recorded this transaction, which could have also possibly affected the VAT. So it might also go there. But you've got to go and investigate what is the issue here. Now, just one warning here. Extrapolation is the type of misstatement that you're going to record will be called projected. Projected misstatements, I cannot go and prove to the client and say, here's your 44,000 Rands worth of errors. I can't do that. So just note that a client might not always be very keen on this type of misstatement. So what you might find in some cases, either more or the closer this projected misstatement gets to your specific materiality, in our case, 800,000 Rand, the more, I'm going to say upset, the more cautious the client will be to accepting that error. And so it might end up being that either the client goes and tests, goes and fixes it themselves. I had that once, only once, or you might actually just go and do a much bigger sample. And in our case, you'll create a new copy. You will go and basically remove any assurance obtained, because you want to increase that risk factor. Or what you might also need to do is actually go and reassess your risk. That's actually what happens. So you go back and you say, actually, there's more mistakes in this thing, and we've now learned that the risk of material misstatement is bigger, and so therefore I'll go back to my risk assessment and actually adjust the risk of material misstatement, which will then increase the risk factor for your second sample. Yes, you will draw a second sample and then conclude on that second sample, which hopefully then gives you a better answer. Right, it is quite a complex schedule, this one, but at least now you know how everything flows together. Good. Now I want us to go and look at the, I'm going to just close the work program and all my tabs. Next up, we are going to go to the cash and cash equivalent section and look at the test of control sheet. So before we would have created another sheet, I can't even remember what we called it. For today's section, I think we called it 42031. So for today's session, we're going to look at 420.20. That's the one that Helen's already prepared for us as our senior on the audit. You can also see she's done some other work before in terms of the bank reconciliation and so forth. So now we are no longer proving a balance. We are testing whether a specific control that the client had in place has in fact been operating effectively as we expect to, as we would have wanted to. Okay. The document looks similar, but it definitely is a control testing worksheet. It is also asking you to briefly describe the procedure or the test. So we're selecting a sample of payments from the cash book and ensure that each payment is released or authorized on the banking system by 2 different users, because the client says 2 different users releases a payment. The authorized users are Emily Harper, Andy Crack, Kathy Fitz, Larry Attic, and Stefan Harper. Now, if you, and for those of you that attended the cash and cash equivalent section, might remember we had a report to management item to say, but surely Andy Crack can't be the only person releasing payments. All right, so we've just changed that slightly now for the fact of having 2 people to test so that we can go and test the control here. So yes, if you were thinking for a moment, hang on, that's not what I remembered. You remember correctly from the previous session, but for today's session, we just changed that slightly. Describe the population that we're going to test for all payments made through the transactional bank account. What control are you testing? That every payment is released by 2 authorized users on the banking profile. How often is the control exercised? Well, there are more than 52 payments made during the year. So we are picking here and saying we can't check weekly because it happens more often than weekly. So we select at least once daily. The moment something happens more often than 52 times, we need to select at least once daily. If I choose any of the others, it's going to adjust the sample size accordingly. So here in number 3D, we've got sample size currently indicated as 10, right? So if I said it only happens yearly or it happens monthly, quarterly, something like that, that would have changed. All right, so that's that. Specific assertions to be tested, we're going to test existence and occurrence because we want to test the validity of payments made. Not necessarily the accuracy, so I haven't tested or selected the other ones. We're just concerned with the validity and therefore the occurrence assertion. Describe the unit that will be tested. Each payment is a sampling unit. And how have you checked the completeness? Well, yeah, according to each time you need to apply your mind and say, how have I confirmed that this is complete? So what we've documented in this scenario is to say the bank reconciliation has been satisfactorily tested. In addition, testing in other areas of the audit has not indicated that payments are not recorded in the cash book. Describe what will be considered a misstatement, a payment that's released without the approval of 2 authorized users. So either 2 people but not authorized or less than 1 authorized person. All right. So in the old days when we still had checks, this could have happened sometimes where the check was signed by the wrong person. Today, seriously, I would be very concerned if this does happen, and it's not an authorized user because, of course, we're relying on the internet banking and the logins from that perspective. Risk of material misstatement, medium 1 in this case. Remember, we're working with cash and cash equivalents. How does it know that? Well, because we named it 420. We gave the number 420. You'll say, what is your expected assurance from other work? Now, the flip side just here is that when I'm doing substantive procedures, I might already have done other procedures. I might have already tested controls. I might have already tested the required procedures. I might have already done the extended analytical. With control testing, you're actually doing this first. So you will say, what is your expected assurance? And sometimes it might actually change. But at this case, we are being highly expected. We're saying, we expect to have high assurance and we're not going to do any more. If I know I'm going to do more, well, then great, then you will go and adjust it. We don't have a risk factor here. You have to apply your own professional judgment in saying, how much assurance do you require? Now, again, at the moment, this is selected as medium, and you know we have the 10 items selected. If I say I need high assurance, the standard default probe methodology says, well, in that case, you need to test 30 items. All right, so I'm not going to change the 30 items. I'm going to change back to medium assurance, and that's 10 items to be tested for us today. All right, now this should be familiar to you. What is the first item in the range? And really the number of payments. If it's invoices stuff, you can really use other document numbers as well if it's not the one, right? So it doesn't have to start at 1. you use the legitimate or the actual numbers. In this case, someone had the honor of counting the number of payments made in the cash book, 1 to 1536. That tells, so if I've included the numbers, the document calculates the number of items in the population. We've said we need 10. We've chosen, so if I've got 10, even if I've just said 10, already I can see here that there are 10 items and I'll have 10 fields. Then when I say I'm going to do systematic selection, then I get the fields to say, what is your first starting point in the random in the first interval? That's where we selected number 3, your sample interval, and then it tells you the numbers. And then exactly the same way, I'm just going to show you, we just gave you a little summary of the control testing. So here's just a screenshot of the filtered items. Oh, let me just move that across for you. So there's the filtered items, number 3, 157, etc. Those numbers you can go and agree to the sample, and all of those explanations or descriptions. The amounts, etc. aren't that important because we are mostly focused on having the right transactions to get the right payment advices. Okay, so there's the sample selected for us. There's the sample 3, 157, 310. When Helen selected the sample for us, she already documented everything for us. And all we now need to go and do is to perform the procedure. What's nice here is that you can actually have more columns. So if your control testing had 3 steps to check or 2 steps to check or something like that, you could have, of course, just included more than 1 column here. I'm just including 1 column because we're literally just checking, are there 2 authorized ones? You could have also said, are there 2 and are those 2 authorized? Something like that if you really wanted to add more columns to complete as well. All right, so the majority of them are completed. Let's go to our supporting documents again to go and see what is it that we need to test for today's purposes. So there's a few of those, 4 of those items. Let me just quickly split our screen also here. So if I then go to the first item, which is the skills development levy, I'll look at this one. So skills development levy, the amount is 11,000. Oh, goody gracious me. Can you now believe it that I cannot access this document? Guys, I can't open it. I apologize. Okay. I really hope I can access the next one. I was able to open it. Oh, there we go. Okay. So there is a payment advice. I'll go and see why it doesn't want to work. There's a payment advice, but now the challenge here, so we're missing out on our trick here. But the payment advice was for 233,000, which is the EMP return. But included in that is the skills development, the SDL, which is 11,420. All right. So that is, the payment was made for 233,828, which then included our 11,000. They just record the PAYE, the SDL, and the UIF separately in the payments made, which is appropriate. Now, unfortunately, mine doesn't open. Maybe yours does open. If you look at the skills development levy, the payment advice, I don't know why mine doesn't want to open now. I was changing some things now this morning, last minute. So maybe I just now, I don't know, locked myself out of this. But in there, you would have seen that it is appropriately approved. Okay, so that's fine. We can go back here and we'll say, yes, it was appropriately approved. The telephone and fax, CC for the CCTV, 469 rands. Let's open that one. The payment advice. There we go. I can read this one. Fantastic. So I will again check wrap up manufacturing. Who were we paying? We were paying Top Sal. There's the amount, 469. Top Sal CC. We can look at a few other things. What are we trying to determine? We are trying to determine, again, here's an account from what's the bank account number. You could go and check that as well. But the important thing we want to check is the final release operators. So there's a code, the code for Andy Crack, and then Andy's name is also reflected there. Sometimes it's only a code, then you need to determine what each code means. Or in this case, it shows Andy Crack and Stefan Harper approved this payment. And we said, if we go back to the top, Authorized users are Emily Harper, Andy Crack, Kathy Fitter, and Stefan Harper. So was this approved by 2 approved users? Yes. We go down and we go and say, yes, it was approved by 2 authorized users. So the payment was released. We will do the same with a creditor payment also. So there I've got a creditor's payment in the last one of my supporting documents. Man. Strictly Inc. Co. You might have seen Strictly Inc. in the past with one of the other transactions we had. The amount here was 292,598, 292,598. Strictly Inc. The same account number and Andy Crack's code and Stefan Harper's code. Yes, it was approved by 2 of the authorized users. Right. So that's fantastic news, because what this tells us is that the 10 instances that we tested to determine if we can rely on this control operating throughout the period has all proven to have worked correctly at the time. So from that thing, we wanted medium assurance. Because we wanted medium assurance, we had to test 10 items. All 10 of those tests worked. And so the assurance level that we've obtained from this procedure remains medium. This is now the final conclusion there. What I want to show you though is that if I did have one error, I'm just going to randomly make one. No. The moment of one error, it went down to low assurance. And I always think low means so very much like, or sounds so much like no assurance. So I wanted medium assurance. There was one error in 10. I mean, really, 1 out of 10. 1 being wrong, 9 only being right. I don't have enough audit evidence to conclude if the controls are operating effectively. What I may need to do is to go and extend the sample, go and test another 20 or go and test 30 to go and check if the total will give me the necessary audit evidence. Okay. So don't then just go and say, oh, you know, actually, let's go for high assurance. No, because now your selection is going to change. All right. It now just goes to these random weird numbers, which is not appropriate for us. We had different numbers when we only needed to test, because your interval changes. Your interval changes and then your selected items changes. So leave this one at medium with your interval selected 3 plus. Create a new one where you then say, okay, now I actually need to test more items. The way to test more items is to make that high. And then what will happen with high, if I just actually make this one the same, until I've actually tested that all have high assurance here. Okay. If I do have that one error, whichever one I pretended to be wrong, then with one error, having tested 30 items, I can still get medium assurance. So yes, I had to test another 20 items, but now at least I can get some assurance, which will reduce my sample size. It really is a given, you know, a bit of a balancing act. Sometimes we'll say, let's just test 10, see if we get the evidence we want and move on from there. Sometimes we might actually say, no, you know, having tested 10, if one didn't work, I'm not going to do anything more. In other cases, if it's a significant risk, maybe we have to test 30 items to get the evidence to be able to actually conclude at the end of the day. All right, so there are a lot of considerations, but now at least you know how the document works. Okay. Good, let's just go back to medium assurance. Good, now the document is as it should be. Right, ladies and gentlemen, we've got about another 10 minutes, so let's go to our admin side. In terms of our slides, if you've got any questions, please drop them now. I did see someone was asking about the material, about the recording also. The session is recorded and we will make the recording available. It might be about a week before we make it available. We just need to edit out all the blurbs. And then if I say the blurbs, they're part with a video at the beginning and things like that. So just be patient, please. We try to get that out as quickly as possible, but we do make that available. Yeah, any other questions that you have? And then while you are thinking of those questions, there is another prize question. So maybe get ready to answer the prize question. I'm going to really try and look carefully to see the first person that submits the right answer today. So what I want to know, let's just go to the prize question. I want you to tell me 2 different sampling methods. What are 2 different sampling methods? How can we select samples? So not the, we're not talking about random selection, systematic selection. I'm talking about 2 sampling methods. The first one to give me the right answer will get a little prize. So please, fantastic. Suraj, you are amazing. Statistical and non-statistical selection or sampling. Statistical sampling and non-statistical sampling are the 2 items. I'm making a note here, Suraj, for your prize. We'll definitely make contact with you. So thank you very much. That's fantastic. Okay, then also, please, I'm still around, so if you want to have any questions, send them through. But just while we finish off on the admin side, what's next? Today was our session for Probe Audit. Yesterday, there was a part on financial statements. Then, not next week, the week thereafter, we've got some more on the financial statements, cash flow statement, XBRL. We've got our last audit one being on the 7th of June, where I'm going to talk about the conclusion in the work program. And then a little bit more in the financial statements about accounting policies, roll forward and updating of the file. So we've still got a few sessions to go. Please look out for those and register for them. You can make contact with Malagay, or even just go look on that screen on that page where we were earlier on. Let me quickly see. There's Malagay's email address if you have any questions, if you want to register, anything like that. I'm not sure if the other registrations are here, but your best bet is to email Malagay if you're not registered for anything, and to get that done. All right, so those are the sessions that are still coming up. Please feel free to participate or to go and watch the recordings later on. Then you are welcome to connect with us. Firstly, Caseware Africa as the company, and then there's also a LinkedIn page specifically for the Get Ahead audit intake. So you are welcome to also connect with that. I did include these in the slide, so if you can't necessarily connect, or if I maybe move over too quickly before you've used the QR code, you can also just obtain them from the slides in your PDF notes. We've got a YouTube channel with lots and lots of videos, Facebook, Twitter, please, or X rather. Follow us on those so that we can stay in touch. And then other than that, thank you very much for your participation. I will still hang around, so if there are a few questions, feel free to ask them. I'll monitor them. But to the rest of you, thank you so much for being here today. Thank you for listening. Go and test, go and play with those sheets. They are really quite fabulous. And then see how you can use and incorporate them into your audit files if you don't already do so. Fantastic. Have a lovely Friday and a wonderful weekend. I'll see you for Sundowners at Table Mountain tonight. Hey? Bye. Ladies and gentlemen, I'm not seeing any other questions coming in, so I'm going to close the webinar. But by all means, if there are any other questions, just post them to Malagay, and we will help you as soon as we can. Thank you, and have a lovely Friday.